welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is April 16th, 2025, and we're diving into the first quarter earnings report of Martin Midstream Partners. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Martin Midstream Partners has just released their Q1 2025 financial results, and there's a lot to unpack, from their net loss to their segment performances and future outlook.
Revenue and profitability overview. Let's start with the overall financial performance. Martin Midstream reported a net loss of $1.0 million for Q1 2025, compared to a net income of $3.3 million in the same period last year. John, what are the key factors behind this shift?
The net loss is primarily due to $0.8 million in costs associated with the termination of a merger agreement. Despite this, the company generated $192.5 million in revenue, up from $180.8 million last year, and maintained a solid adjusted EBITDA of $27.8 million. They also declared a quarterly cash dividend of 0.05 per unit, which shows their commitment to returning value to shareholders.
Segment performance analysis. How did Martin Midstream's different business segments perform this quarter?
The transportation segment saw a decrease in adjusted EBITDA to $8 million, mainly due to lower miles and higher operating expenses. However, the sulfur services segment performed exceptionally well, with adjusted EBITDA increasing to $11.5 million, driven by higher volumes and margins. The terminaling and storage segment faced challenges with inflated operating expenses, resulting in a decrease to $7.7 million. Lastly, the specialty products segment's EBITDA decreased slightly to $4.5 million due to lower margins in the grease division.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 2 cents for this quarter. However, Martin Midstream reported an actual EPS of 3 cents. What does this mean for the company?
This miss on EPS indicates that the company faced more challenges than anticipated, particularly with the merger termination costs impacting their bottom line. With only one analyst covering the stock, the forecast might not fully capture the complexities of their operations. This discrepancy highlights the importance of understanding the underlying factors affecting earnings.
Operational efficiencies and future outlook. Looking ahead, what is Martin Midstream's outlook for the rest of the year?
CEO Bob Bondurant mentioned that they are maintaining their full-year adjusted EBITDA guidance of $109.1 million. However, they are cautious due to geopolitical uncertainties and potential trade tensions that could indirectly impact their transportation segment. On a positive note, the sulfur services segment is expected to continue benefiting from strong demand, especially with anticipated price increases in the second quarter.
Key takeaways. In summary, Martin Midstream Partners faced a challenging first quarter with a net loss and an EPS miss. However, they showed resilience in revenue growth and maintained their full-year EBITDA guidance. Thank you, John, for your insights.
Thank you. It's crucial for investors to keep an eye on how Martin Midstream navigates these challenges and leverages opportunities in their sulfur services and other segments.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more financial insights. We'd love to hear your thoughts on Martin Midstream's performance in the comments below.